Hello everyone, good afternoon. This is Daniel Birch from Perennial. We are just putting together everyone joining for the webinar. At the moment we've got most of the people that have registered, so if you can just bear with us for a couple of extra minutes, we'll just wait for the rest to join. So hopefully you should see on your screens now the front page of the presentation, which is Perennial Smaller Companies Responsible Portfolio Webinar. So the way that it will work today for us is that we'll go through the presentation, and the intention is that the presentation shouldn't take much longer than sort of 25 to 30 minutes, with hopefully 15 minutes of questions. I'm sure there will be lots of questions, so please do type the questions in. We can see the questions coming through as you type them, and hopefully we can answer all of the questions as we go through. So it's not going to just be me talking today, which everyone will be very thankful about, I'm sure. We will also have the two portfolio managers, Damien and Will be leading this webinar. So we're just waiting for another couple that have registered that said that they would be here. I think maybe Damien, we should probably get going as we go. All right, guys, so please do type in questions as we go. It would be great to hear from you and to hopefully answer more specific things. Okay, great, thank you.
Okay, everybody, welcome to the webinar. It's Damien Cottier here, the portfolio manager for the fund. Just wanted to say thank you for taking the time to listen today. Will and I are very excited about the pending launch of the portfolio, and we hope that you'll enjoy the presentation and hopefully be able to answer any of the questions you have on the process and the portfolio. Just an agenda briefly. By way of introduction, my name is Damien Cottier. I'll be the portfolio manager for the fund. I've worked at Perennial for over 13 years now, covering stocks in a wide range of sectors and also market capitalisation bands. So I've worked on portfolios from the micro cap product with companies down at $10 million market capitalisation, right up to some of the largest companies in the market in the top 20. Also, William Wu will be presenting today as well. Will has also been at Perennial quite some time. He has been covering companies from a variety of sectors as well for many years, and he has also in recent years taken on the mantle of our ESG analyst, and so Will and I are working together quite closely in working on the portfolio and putting together the portfolio. Just a couple of brief highlights there on the slide on the side of the slide. Perennial value has been around for 18 years now. We've got around about $5.4 billion assets under management across various sectors. We've got a very large, by market terms, small companies team with 7 in the team, and we've been managing portfolios in that capability since 2002. We currently have over $1 billion of fund in the small cap team, managed by the small cap team, and there's just some details on performance there, with the small cap performance being very solid for over most time periods. And in the last 12 months, we also launched a micro cap fund, which I've been managing part of, and that's been quite successful, and has returned over 56% net of fees for the last year. So that's just a bit of background. Moving on to slide 5. Sorry, just having a few technical issues here. I'll just hand over to Will, who'll run you through some of the internal initiatives we have.
Thank you, Damien, and thank you for those joining us on the webinar. We're just starting on slide 5, and I wanted to highlight briefly some internal initiatives as we're not just seeking to run a responsible portfolio, we're integrating this with our daily business. We're signatories to the UN PRI since 2009 and recently signed on to the Task Force on Climate-Related Financial Disclosures. This essentially means we integrate our ESG research into our investment process and actively promote companies to assess their climate risks. Other initiatives also include the Climate Action 100, Humpty Dumpty Foundation, and our Green Office initiatives. Moving on to slide 6. We're on a journey and wanted to highlight just some of the key milestones in that journey with you today. In 2016, we started to create our own ESG database covering all ASX listed stocks. I'll share more detail on this in just a few minutes. On the 1st of February 2018, we launched a responsible portfolio seeded by employees, including Damien and myself. This portfolio has outperformed the Small Ordinaries Index by 2.75% after fees. It is pleasing to say that we have generated this alpha sustainably. No miners, no energy stocks, and we have avoided recent corporate governance concerns such as Afterpay, Big Un, GetSwift, Blue Sky, and the big banks. Moving on to slide 7. Our proprietary database. This database was internally created and contains data on approximately 400 companies with 40 ESG-related attributes and data spanning a number of years. This is in conjunction to our written company reports, which includes detailed analysis on company-specific ESG issues. Given the broad nature of ESG, we supplement this with publicly available information from government and industry websites, sell-side research, and CARE, who provides the carbon data. Now moving to slide 8. Now I'd like to highlight our screening process. First, we start off with approximately 400 stocks in our ASX universe. We negatively screen out fossil fuels, alcohol, tobacco, weapons, forestry activities, gambling, human rights violations, and unhealthy fast food. We negatively screen more company-specific activities, and Damien will give you an example of this in a later slide. But essentially, we ask ourselves, would our investors be happy with these stocks in our portfolio? Once through our ESG filter, we actively research and model over 140 stocks with some financial data spanning back to Perennial's foundation year in the year 2000. Thank you, and now I'll hand over to Damien.
Okay, moving on to slide 9. Like I said earlier, Will and I are very excited about this. We've put a fair bit of work into the portfolio and have really sought to come up with something which is a little bit different to what we believe are the other offerings out in the market. With the portfolio, we're looking to take advantage of our deep knowledge of companies in the Australian market with our 18-year history and all the financial work that we've done on those, and we're integrating that with the ESG work that Will mentioned earlier. Once a company has passed the negative screen and looks attractive from a valuation point of view, we then do additional work on ESG policies. I wanted to highlight that the key differentiator for us is that we have an ESG process embedded in our process, with each analyst responsible for ESG, supported by Will, who leads the charge on ESG matters internally, and who himself has been covering stocks for many years. Our understanding of some of the other products out there is that ESG is more of an overlay to the process, and with the ESG and investment process is separate. When deciding whether to include a company in the portfolio, Will and I discuss and debate the ESG issues with the relevant analyst, and as Will mentioned, seek to answer the question based on what we've discovered, would an investor in the portfolio be prepared to hold the stock with the things that we've discovered. Before moving to the next slide, I wanted to highlight what I believe the key advantages of the portfolio and our managing the portfolio. The first is that the fund is focused outside the top 50 stocks, which means it avoids some of the responsible investing pitfalls, such as the major banks, major miners and supermarkets. And that brings me to what I believe is the second strength of the fund. As we've had a lot of experience in small cap and micro cap investing, we have an extremely broad coverage universe and are used to seeking out investments beyond what I call the usual suspects and have familiarity with companies in the Australian market across a broad spectrum. This means that we can go the extra distance to find companies so as to deliver a diversified, responsible portfolio. I should also add that while we continue to look through it with a value lens at the stocks, the process has been structured so that we can hold stocks where ESG considerations do outweigh valuation considerations. Moving on to slide 10. This page is intended to give you a feel for the types of stocks we are including and excluding in the portfolio, indicative portfolio at this stage. I should say that we're still doing work on these companies, so this may well change as we get closer to launch date. And of course, we see ourselves very much being on a journey with this, so we continue to seek feedback from the market on the stocks with our thoughts. We've included here on the left-hand side stocks which on balance we intend to include in the portfolio, and on the right-hand side stocks which on balance we intend to exclude at this stage. I'll quickly run through the stocks to give you a feel for our thinking, but obviously we're happy to take more questions later in the presentation. I hope you'll get a sense that we're trying to have a diversified mix of companies in the portfolio. So running through the companies one by one, first one is WindLab. That's a company whose genesis was the CSIRO and is a developer and owner of wind, solar and battery farms, both in Australia and overseas. Marine Energy is a generator and a retailer of hydroelectric power in New Zealand, and also a retailer of renewable energy in Australia and the UK. TradeMe, it started out its life as a platform to trade used goods in New Zealand, and now also has an online classified portal. Pendal is the new name for BT Investment Management. Importantly for us, it was a UNPRI signatory. There are a number of other investment managers that we looked at which didn't fit the bill on that front, and so we included Pendal in the list here. Primary Healthcare, that operates medical practices and provides pathology services. While this has had some governance issues in the past, in our view it's in much better shape from a governance point of view now with a complete board and management overhaul. NIB is a health insurer in both Australia and New Zealand. Adairs, this is the only retail in the portfolio, in the indicative portfolio. It's a homewares retailer, and we're reasonably impressed by the comprehensiveness of the responses they provided to our ESG questionnaires when we contacted them to learn more about their policies. Bendigo Bank, this is the only bank we intend to hold in the indicative portfolio. It's the only bank which so far hasn't been before the Royal Commission and is community and charity focused given its community banking model. And finally, Cochlear, which I imagine you're aware specialises in hearing implants. So on the right-hand side, we've got some of the stocks that we've looked into and decided to exclude from the portfolio. The first is Fairfax, where we had a look at the disclosure around its use of paper in the newspaper production process and decided on balance to exclude it. Clover Corporation, Clover manufactures encapsulated omega-3 products for use in infant formula. On this one, when we did our investigations, we couldn't get satisfied with the ethical sourcing of the fish oil that's used in the process and have decided to exclude it on that basis. And finally, Event Hospitality. That's a company which operates cinemas and hotels in Australia and has been excluded on the basis that liquor sales are around about 10% of its sales. So that's just a very quick run through of I could give you a flavour of the stocks we're looking at including the indicative portfolio, and like I said, we're happy to take questions on those later. Moving to slide 11, this is just giving you an indication of the greenhouse gas emissions from the portfolio being significantly lower than index. And this is based on CARE data, which is the external data we use on this. And the reason we're using external data for greenhouse gases is that it's difficult sometimes to obtain that information from public documents. Moving on to the next slide. So in summary, I just want to give you a bit of a flavour for what we're proposing. We've got an experienced investment team which has covered a broad range of stocks for quite some period of time. The staff has exceeded our initial ESG portfolio, which has started doing reasonably well, although we're working hard to make sure that continues. We've got an extensive ESG database based on our company engagement. And like I said, one of the key points I want to get across was we've got fully integrated ESG in the portfolio. And so all that sort of adding up to we're wanting to come up with a true to label responsible portfolio, a little bit different to what else was out there. And we're hoping that it will launch soon on Hub 24. So with that, I'll open up to questions.
All right, it's Dan back here, guys. Thank you for listening in. Like I said, we really wanted to make this as interactive as possible and answer as many questions as you can send through. So please do send them through. We've got a few questions here already. As we answer the questions, I'm just going to flick onto this to the next page, which just shows you a few more details of the proposed portfolio. Let me just do that. So we've got, like I said, we've got a couple of questions that have come through, and what I'll do, I'll ask the questions, and then either Will or Damien will answer them. So I'll ask them out loud so everyone knows what question we're answering. This one's definitely for Will. How many factors do you collect in the ESG database?
Thanks, Dan. Like Damien mentioned before, we're on a journey. As at this stage, it's over 40 attributes and goes back a number of years across 400 companies, and they're equally across the E, S, and G, environmental, social, and governance. And that number of attributes is expanding every day. They include various things such as greenhouse gas emissions, water usage, electricity usage, the various climate change related policies. In the social criteria, they would include injury rates, the amount of female staff employed by the firm, and it also includes social related policies such as health and safety policies. And in governance, that really looks at the composition of the board. Is it independent? The number of female directors, and also anti-bribery policies, whistleblower policies.
Great, thanks, Will. Okay, we've got another question that's come through here about unhealthy foods, and this will go back to Will as well. What is your definition and criteria score for unhealthy foods? Examples, please.
Thanks, Dan. This is really a practical test for us, and again, it's one of those stocks that we say, would investors be happy if we held this in the portfolio? So the way we identify unhealthy foods, and essentially it really is, the fast foods such as Domino's Pizza, and that wouldn't just be for unhealthy food reasons, but that would also be for franchisee risk and corporate governance issues that we've seen recently. And another example would be, say, Collins Foods that runs the KFC chains in Australia.
Thanks for that, Will. Okay, we've got another question here. So thanks, guys, for sending the questions through. Please send through more if you have them. So this one, again, maybe Will, maybe Damien, depends who wants to put their hand up for this one. Can you please expand with an example, a stock that has an ESG score that outweighs its financials or the financials of the company?
Thanks for the question. In the indicative portfolio at the present, there isn't many stocks which fit that criteria. In general, we've been able to find stocks which have strong financial metrics and also ESG metrics. The one that's probably closest to that would be Meridian Energy, which I mentioned briefly in the portfolio, which is the hydroelectric retail in New Zealand. Although the valuation on that is probably a little bit more elevated than we would typically hold. However, it is currently it's currently at the low point of the earnings cycle as far as we can see, and so it's probably that's probably the one that's closest to the border. But at present, the indicative portfolio we've put together, the PE of that is lower than the market by about 7% based on current numbers. So at the moment, we're sort of satisfied that we're not giving up valuation to take too much account of the ESG criteria. At present, we haven't had to make that trade-off. But I just wanted to make the point that if there was a stock which came up and may have some strong ESG attributes, then that we perhaps wouldn't hold in one of the other funds, then we can hold it in this fund. And that's really around, I guess, our belief that with ESG, as it becomes more integrated into portfolio construction and the like, then stocks, the small number of stocks which satisfy those criteria will do reasonably well.
Great, thank you for that, Damien. We've got another question here, and perhaps Damien, you can get this one as well. When you do launch the portfolio through Hub24, how many names do you think that you'll have, and do you have sort of a range of sort of accepted number of stocks in the portfolio?
The range that we're looking for in the original portfolio is in 25 to 30 stock range. That will probably that'll be sort of the sweet spot, if you like, for the portfolio. It may increase or decrease depending on the opportunities that we find out there, but we're reasonably satisfied with around about that 25 to 30 stock numbers, and the sort of the indicative portfolio put together has around 30 stocks in it at present.
Yeah, sorry, we've just got another good question that's come through here. So thank you for that. How comfortable are you that Bendigo Bank will survive scrutiny by the Royal Commission? That's a very good question.
It's always difficult to predict these things. However, we had a meeting with management last Friday, and based on our discussions in that meeting, we're not, as far as we're aware, they're not aware of anything that they're required to appear for at the moment, but the commissioning will go on for quite some time, and you can never rule anything out. But based on what we know at present, there's nothing on the horizon.
Okay, we've just got another one that's come through. So here we are. According to the Ethical Advisors Co-op questionnaire, you use FactSet. My understanding is that you would then have access to MSCI and Sustainalytics ESG data. You've mentioned you're using CARE data. What is your preference for ESG data and why? So, thank you.
Thanks very much for the question, Alexandra. We do use FactSet, and you can access MSCI and Sustainalytics through that, although that comes with additional imposts, is my understanding, through FactSet. We've looked at a number of these providers historically. We haven't looked in the last year or so, and about 2 years ago we looked at them. What we actually preferred the reason we're using CARE is because for carbon data, it's difficult to get that data ourselves. For the other data, we actually preferred to use publicly available information for that. With some of the other services we found, particularly when you get into Australian smaller cap companies, they didn't really drill down to the level that we were looking for in small cap companies in Australia. And so we prefer to do the work internally. That's why we developed our own database. And so I can't rule out that we won't use something like that in the future, but we found that the data in the small cap space was not always there. And the other thing is we found there were some unusual consequences that came out of the data. I forget which one it was, but one of them, and quite often Stockland rates quite highly on ESG scores. I cover Stockland, and I know that around about 30% of its earnings come from basically buying farmland and turning it into housing. And so I don't see it as being as high as some of those services do in terms of from a sustainability perspective. And for that reason, we like to go into more granular detail ourselves, and that's the reason why we've adopted the approach that we do. I hope that answers your question.
All right, so we've got any more questions, please send them through. Now, in terms of the way that we're going to construct the portfolio, as I mentioned, we're going to put it through Hub24, and to give you an update on that, we're currently going through the paperwork with the guys over at Hub, and they've assured us that it should only be a number of weeks before we're live on their platform. Obviously, we're as anxious as anyone to get going on this, because we've got some fantastic feedback from the market with regards to what we're trying to achieve. Please type in any more questions that you might have. Of course, feel free to contact any of us after the webinar if you have any questions afterwards as well. We will be making the webinar recording available if you need to send this on to anyone. And of course, we can send through this PowerPoint slide deck as well. So we haven't got any more questions that have come through. Was there anything else that you guys wanted to add over and above what we've said already?
No, I think just thank you very much for taking the interest to listen in, and don't hesitate to contact either myself, Will, or Dan if you have any further questions. And apologies for some of the technical difficulties. This is our first one, so we're learning as we go. But thanks very much for your involvement.
Thank you, everyone.